day. Ira Epstein with your metals market wrap-up for this Monday, the 16th of March, 2020, just around 3:06 p.m. Central Time. So we're not at the settlement prices, but you can see what a wild day you've had. You bounced 5 cents off the lows in copper, still closing at 238. You got as low as 33. Gold got down to 1453. Is it getting overdone? Probably. But remember, when you're in a crisis the way that we are right now, the norm is people are selling everything. They don't know where to run for safety. They want to make sure they have their cash. Blah, blah, blah. This is not the financial crisis. This is a virus crisis. And it's going to put strains on different parts of the finance of our economies worldwide. But that's what the central banks have been preparing for since 2008. So if you're trying to lose your calm, don't. Do you have to trade every day? No. Do you have to trade every week? No. Are the opportunities going to be here? Yeah. So what are we getting now? Remember what I told you. We seem to have a pattern. And I've mentioned it all last week, and I'll repeat it. The pattern is we've been getting these monstrous breaks on a Monday. Then the market goes into somewhat of a Tuesday reversal, maybe a Wednesday as well. Then we start thinking about the upcoming weekend again. And as I said, and I know I said it this past Friday, do you honestly think the news over the weekend, be it from Europe or the U.S., is good at this point? Now, eventually, we're going to see less cases in Italy. It was the hardest hit, and the first one hit that way in Europe. Now, Spain has just had to close down everything. We've seen the UK's closing. We're seeing country after country is feeling it. So they're coming up the curve line, too. Italy might be at that peak already, and you start looking to see when it's not going to have as many cases. We don't have the cases of the COVID-19 in China going the way they were. They're nothing like it. In fact, the factories are getting back to normal. Now we have to cross our fingers that South Korea gets more back to normal and Japan. So then everything starts leaving it. But as you get into the peak, you know human nature. You're scared. You're scared when you're hearing you can't go to a restaurant in a big city. Not in Chicago, not in New York. Those are done. Bars, same thing. LA still, people are going out. I don't know why, but that's what they're still doing. The president's asking millennials specifically, stop this congregation. Stop in Chicago, I was shocked how many people were out for St. Pat's Day at night, even though we didn't have the parade. Okay, it spreads. I understand your congregation spreads the disease, not the millennial only, it's people getting together. We've got to hunker down for a couple weeks, and that's where you're at. I'm at work. A lot of my staff are at work. Did we miss people today? Yeah. Are they playing it cautious? Yes. Nobody that we know has come down with the case, but you know, the CME group closed the trading floor, so a smaller building today. All right, on weekly gold. For the week, we're down, about 1.25%, 1.15. You've been in a vertical price drop since literally 1670, 240, down to the lows today, as you can see. Wow, giving up quite a bit. Gold did not offer the golden parachute that people were looking for. Anyone that says, oh, it did its job, do you really think so? I don't think a market that's gone from 1,700 down to 1,460, so that is a drop of, about 18%, is done that good. Maybe you'll say in relation to the stock market it has, and for that I'll applaud you, that it has done better than stocks have. If you take a look at the chart pattern, you have a higher high and a lower low. This is what you call a vertical price break. Could you have caught it if you decided that you knew enough that this was all going to come apart? I'm sure you could have. Did the average person? I doubt it seriously. What did the market do? It is now sliced through the 18, the 100, and down to long-term support, the 200-day moving average of closes. Longer-term traders, I wouldn't be surprised if they're nibbling. You get to that 200-day average in gold, those gold bugs nibble. And I wouldn't be surprised. I have certainly no reason to be a buyer or a seller here, but I understand what could be happening there. you're excessively under the lower Bollinger Band. And gold has a habit of getting out of the Bollinger Bands to the top and bottom. So unlike the ETF for spiders, that's part of its nature. We'll see if it can snap back in. In terms of momentum, this is not a locked-in downside momentum. This is an oversold market, not even close to embedding. So that's what I'm seeing on it so far. The gold-silver ratio, I don't recall the ratio. I can't say I never. I don't recall, and I've done my best to find when the ratio of you need 117 ounces of silver to get an ounce of gold. It just exploded. Why? Because factories are shut in Europe. They were shut in China, Korea, I can go on and on. At the end of the day, silver is an industrial use metal, and it's taken its beating. Also, when we look at silver, it just went into its vertical spin, similar to gold. Can't argue that. A little better of a chart because the market did fight a battle at the 100-day and the 18-day average of closes, but it has let go. Copper, new lows for the move. We were hopeful that this area might have been a support. You can't beat the virus. It's not about the chart action. It's not about your fundamentals. You can't beat the fact that when the virus comes in, there's less demand for the usage. It's going to pick up out of China, and eventually it'll pick up back in Europe and other parts of Asia. We have to get through whatever we have to get through. Are you getting excessive? Yeah. You're down, but you'll notice you get back over, you get under, you get back over. The market has broken out from this pattern. Do you remember me saying we had our 2 closes in a row down? That was the breakout. You're getting it. It's continuing on. Platinum just completely fell out of bed. Palladium market, same thing. The bull market in palladium over. It could come back like a rocket ship on you. And I'd be watching how this market tries to hold here if it can get back into the lower Bollinger Band. But markets will fight. They'll get overdone, and you got to let them spin themselves out of it. As for the dollar, it's not getting the run on it. It had this big jump. And if I was asked in the office today when I got in, Ira, tell me why the market went from that high to the low, back up in a vertical move. What have I been telling you all here? The market is seeing too many waves to make it tradable. And I believe that's the case. Is the virus better for Europe? Are they going to be a stronger currency than the dollar, the yen? Do you really think their economy is stronger than our economy? It's not the issue. The issue is where do you run to protect your money? Plus, there's that old word, repatriation. When things get bad, people want back their currency values. So the dollar, they were dumping as they're buying their currencies. Then they ran to the dollar for a bit of protection here. That's why it was rallying against other currencies. But it's not in a trend. It's just wild vertical moves, and that makes trading them hard. And I guarantee where you're left is second-guessing yourself. I've been in your shoes, done that before. Been writing my newsletter for years. The hardest thing to do in a newsletter is tell your paying clients, your subscribers, don't do anything. This is not an opportunity. This is a road to ruin if you're not careful. Why? Because in futures markets, you have to think, unlike stocks, this is all about leverage and trading. Investing is the stock market. You look at individual companies, you take your chance. Doesn't mean that they're going away on a wipeout. But on futures, you get this crazy leverage. It moves all over the board on you. And that's not what I think trading is about. That is what throwing a dart at a wall is about. You pull back, you wait your opportunity, and they do come. The key is to have enough money left in your account without doing something you shouldn't have been doing, so that you have a shot in a more normal market. Even then, we know the risk is tremendous. But that at least control your risk. You can't control it. When you're walking in on a Monday or a Sunday night and the market goes crazy off Fed announcements, the virus, you think you can do that? You think it really works as you're looking at the gold and telling me, oh, this is a safe haven investment? People sell everything when they're scared. But I talk about this in my reports. Early in the morning, 5:30, quarter to 6, I'm recording 40 videos. I'm not in them, thank God. I am at home, got my headset on, my studio, and away we're going. And I'm telling you what I'm seeing in the market. I'm telling you what I've already read in the market in Asia, what it's looking like in Europe, what's going on overnight, how to interpret the reports of the day, or should you interpret them? They're old news. The market's consumed by all this. So I bring you some logic. How do you get this? Go to our website under the word research. We have a whole fact sheet that explains it. Part of your what I've been doing, since I'm doing now ETFs and spider videos, I'm wrapping a couple of weeks of those free into the subscription, the paying subscription for my morning subscriber video. Take a shot at it. $7.95 in this market. You need some entertainment anyways. You can throw darts at me. I'm Ira Epstein. You have a good day, and I'll talk to you later.